So the next step in our trading is going from daily bias to then find a protected swing to then find an entry. So like in the last video, we have to establish a daily bias. We see that we have a range, okay, and we have highs and lows, and we use these highs and lows to determine our direction for the day. As we can see, we have a candle here with fair distance from the low of the range right here. And so we can use that as our reversal point. So a reversal, aka candle 2, is when a candle manipulates the low or the high of the previous candle. So this is the accumulation, the range, then the manipulation, the fake out. So then we are going to trade candle 3, which is the distribution, the movement higher, the continuation from the reversal. So before we do all of that, we need to confirm the reversal. So we go to the lower time frame, you go to the hourly, and then the way we confirm the reversal is with CISD. It's one of the 3 confluences that we're going to use. It's the one that we explained before was a fair value gap, a space between the 3 candles of expansion. Obviously, we're not going to use this one because it's against the trend, but it's good to see that we inverse it. We have our CSD as a confluence as well, so it's the reversal point right here. You see the reversal point, and then you have to confirm it with CSD. And CSD is basically an order block. It's the reversal leg, the manipulation leg, and then a closure above or below the last series of the opposite candle. So right here we're in a bullish case, so we went down first and then up, so the opposite candle is a down close candle. So we went down, then we closed above the last series of down close candles, making this a CISD, changes state of delivery. Okay, so that's part 1. We've confirmed the reversal point, so the low here is not to be touched. We also want to take into considerations the formation of protected swings, but that's mainly on the entry time frame. So right here we have our first protected swing. This swing we're going to trade off of in the next candle. So we're going to let some candles play out for a point of interest to form. That will be either a consolidation low or a fair value gap. Let's hope it's a fair value gap. Right here we have our fair value gap. Now a fair value gap can be pre-existing in this candle, in the previous candle, or you can form it in this candle. So right here we formed the, oh no, this case it was pre-existing because the new one opened and then it left this. So that's great. We have a fair value gap of good size on the previous candle. So what we're gonna have to check is for a candle 2, same deal in the daily, we're gonna have to see a candle 2 in the hourly to then go to the last time frame. So and then we repeat the case. We confirm this swing, and then we look for another continuation entry. So right here, we're going to see if we're going to interact with this fair value gap. Trading higher, creating another fair value gap, another point of interest. And then we have our candle 2. This candle 2 has a change of state of delivery built in. So this could be an entry. If you don't want to go to the lower time frame, you can enter on the close, the low right here, because this one's protected, and then target 2R. Target 2R. Or what you can do is refine this down and then go to the 5-minute, and then you do the same deal with the daily and hourly. So you see the manipulation leg, and then you have to confirm it with CISD. So right here we have the CISD that we marked out previously, but then we're refining it down on the 5-minute. So right here we have our CISD, change state of delivery, and then we do the same deal with the hourly and the daily. So we establish our points of interest, fair value gaps in this case. You can also use a previous consolidation to manipulate the low of the consolidation to then trade higher. We're close to our targets, which isn't that good because we can expect a new phase of price if we interact with them. So it's better to see a trade down. It's better to see a trade down first to then go up without interacting with this. But let's see what happens. We make a candle to closure, but we also manipulate here. Let's see if we form another CISD, and that's our entry trigger. Trading lower, marking this as a consolidation, which is preferable because we're gonna deal with this since it already interacted with this high. Let's hope it sweeps this. No, but closes there. We can also check our correlated asset, which is the S&P, to see if it already interacted with this low. We see that it didn't. See what happens. We manipulate the high, creating a bearish candle 2. That doesn't invalidate our bias. It just said it's more consolidation. We inverse this. We inverse our fair value gap. We engage this fair value gap. And we're still trending lower. Get rid of this fair value gap. So this is basically one big consolidation, depending how price will move here. So let's mark our consolidation low and high. But right now we're focusing on the low since we're trying to go higher, because reversals to go higher happen at a low. So let's see what happens. Also, this can be a point of interest replacing a fair value gap. So right here, we sweep the low, creating candle 2. So then what do we need to see? We need to see another change of state of delivery, and that will be our entry. So the change of state of delivery would happen at the end of this opposite candle, this down close candle. So we need a closure above here. Right now we're still ranging. A new candle opens, and then we get our CISD. So with that, we can look to take an entry at the close here, let our stop at this protected low, and then targeting 2R. Let's see how it goes. Right there, we take 2R. If we decide to trail this, we can see what happens. So we take 2R. We're still in the trade. If we decide to not take profit, see what happens, because we still have targets. That's why we're staying. It's possible to say, but the minimum requirement is 2R. But you can also target these highs using the hourly targets. You can use this high, this high. Let's see if it works out. Still in. We can use these highs. I forgot you can't see it on the phone. So I'll mark them out real quick. You have this high right here, target number 1, and then this high right here, which you can see here as well. So we're using the hourly as targets if we decide not to take 2R at the 5-minute. Let's see how it goes. We're here, we take target number 1. Let's see if we take our last target. And there we go. Take our last target. So if we do decide to stay, this trade would have been an insane $42R trade. But yeah, it's in one daily candle, 42-hour trade using the model. And that's the video. So essentially, you are confirming candle 2 closures with CISD across three of your time frames. So on the daily, you're trading this candle, the candle 3, following the reversal candle. And on the hourly, you're confirming that candle 2 with CISD, and then establishing your points of interest for value gaps. And then you see fair value gaps here,